A very good morning, good afternoon, or indeed good evening, wherever in the world you happen to be, and welcome to today's webinar, which takes tanker shipping leaders as its theme. It is part of Riviera's Maritime Leaders Webinar Week, which has been running for the duration of this week, and the webinar itself will be 45 minutes in length. Now, just before we get underway, what I'd like to do is share with you some key bits and pieces that will help you get the most out of today's proceedings. First and foremost, please be assured we will send you the recording after transmission. Please do submit your questions at any time using the messenger, and we will do Q&A throughout the webinar. I can see some of you have already acquainted yourself with the system, which is great. Please do use it to the max. We have two of the industry titans here open and available for your questions. Do stay tuned into the end so you don't miss out. I guarantee over the next 45 minutes, we're going to hear original, exclusive, and maybe even occasionally some entertaining insights into what's going on in our market. So do stick with us for the duration. At the end of the webinar, I will email you an exit survey. Please can I ask you to take the 2 or 3 minutes to fill it in, and in return, I will commit to sending you the recordings. So a word or two of Riviera, your hosts. Riviera Maritime Media is a maritime and offshore information specialist active in 4 areas: news, events, jobs, and data. To learn more, please visit the dedicated website www.rivieramm.com. This is me, Edwin Lampert. I am Head of Content at Riviera Maritime Media, and I will attempt to moderate proceedings today. So what's on the agenda in terms of topics? We'll be variously looking at staying robust and resilient in a shifting energy market. We'll consider what it takes to right-size your business and operations for a sustainable and viable future. And we'll also consider what it takes to reinvigorate the supply chain. We'll look at new standards, collaboration, contracting models, and cash flows. The format will see us enter into an open discussion. Please submit your questions at any time, as you know, because we will take Q&A throughout the webinar. And at the end, we'll try and share some key takeaways and conclusions, as well as preview what's next. Well, in some respects, our panelists need no introduction, but just to confirm, we have Michael Scove. Michael, of course, is CEO with Hafnia, and we have Robert Bugbee, President of Scorpio USA. So question 1, gentlemen, or agenda item 1 rather, is perhaps coming to Robert first and then Michael. What does it take to stay robust and resilient in a shifting energy market?
Well, I think both Michael and Hafnia and Scorpio's fleets are in the product tanker market, the clean petroleum tanker market. So I would have thought that the very first thing we need is a good fleet and a modern fleet, and a fleet that can can service the customers properly with the changing regulations, etc. I think that would be the first thing that you would have to have, and I think that we both, on top of that, have those fleets, the systems and the staff to and size. Critical mass is what's going to be required as we change. Without going into too much details right off, as this is an introductory position, I think you need to have a modern fleet, you need to have access to capital, and you need to have critical mass.
Thank you. Michael, your views.
Yeah, no, I mean, I think as Robert is saying, I think these are the key elements. I think you could probably elaborate a bit and say that, I think the people part has always been important, but will also be increasingly important going forward. You have to be an attractive employer. I think that, if you look at, a sustainable business going forward, I think what's got to be the key criteria is, capital is one for investing in ships, but, ships without any people is just steel rusting in the water. So I think fundamentally an attractive employer, as Robert said, scale, and also to be able to attract, a broader talent pool in the world. There's a big difference in the world in terms of, whether shipping being a popular place to work or not. So you have to be global and you have to spread out to make sure you can attract the right talent that will keep your business strong in an ever-changing world.
I think at the heart of being chartering a robust and resilient future is sort of the decision-making process and your long-term view. Do you have how far ahead can one plan in terms of today's market conditions to ensure you have that robust and resilient outlook, Robert?
Yeah, I think things get a little bit fuzzy when you start planning sort of into 10 years, but once you start looking over the next 5 years, you've got you've still in that area where it's reasonably long term, but there's a fair degree of clarity. And there are a couple of themes that I think that are going to work in the next 5 years, and that is that we have a product tanker market where the demand is likely to increase, especially as the world recovers, and so the demand side will increase. But ironically, the supply side is very constrained right now because it has very few ships on order, and most importantly, an aging fleet. For the first time, this product tanker market is really aging. We also have a longer theme overlapping that maybe in 9 years time, 10 years time, 12 years, 15, that we'll probably see more renewable energy. We may even have a declining demand curve for product tanker in use. So ironically here, for the first time, you've got to say to yourself, are new buildings worthwhile? I mean, right now there's a lot of talk about what engines should be used, how they should be eco-friendly. But I mean, an even more basic question to that is, should you actually invest in new buildings at all? That's going to be really, really challenging for companies whose fleets are older. I mean, if you have a fleet that is approaching 15 years old, or a vessel worth 15 years, you're going to move out of the premium clean petroleum trade. You won't necessarily certainly won't be able to take one old ship and buy one new ship with that. That's not how the calculation works. And you may not wish to order a ship that's going to deliver 2002 or 2003, or a year or two in 2004, if you felt that it's not really going to have a 20-25 year useful life as traditionally been in the past. Those are going to be I think the real difficult themes right now.
Michael, could you perhaps speak to those? But in your earlier remarks, you referenced consolidation. I think it'd be good for you to amplify on what role consolidation might play in staying robust and resilient. And of course, we are talking about a shifting energy market. So perhaps you could say a word or two about preparing for a future where renewable energy is going to become an increasing part of the profile, if not in time, perhaps the dominant part of the profile. Over to you, Michael.
Yeah, no, I mean, for sure, right? And I think this is the world that we're living in. And I think, I mean, if we talk about the latter part first, I mean, it's important, I think, to understand, at least that's what we try to do here, is that, our core competence is to arrange transportation. Now, at the moment, that happened to be refined oil, but I think when we talk about a shifting energy market, I don't think there's any limit really to what we should be able to do. We're back to the people side. If you create a model where you can attract the right people, it's really about defining the core competence, arrange transportation. So that will require, probably going forward, obviously an element of adaptability. So in other words, you can have what you have today, but you need to look forward and say, in a shifting energy market, and renewable is an interesting discussion, because we all talk about it in terms of fuels, and what does it mean for our engines and what we burn. But the most important point in my view is actually, what is it going to mean for the changing transportation patterns in a new world of renewables? What will have to be moved around? And I think this is another path that we have to think about when we talk about staying robust and resilient, is how do we adapt and make sure we have an organization that can adapt to it. And that kind of leads me into the consolidation part. All of these things will require investments. It will require access to a lot of information. So I think it's going to be very, very difficult in a changing environment to be too small, because you won't have the access to the equity and to the liquidity in general to make those investments that will be required in the future. So maybe just as an add-on to that, I mean, I still think when it comes to the consolidation that we also have to remember that the world has changed in the sense that, you know, if you like the old days, one of the best tools we had was being able, you know, to control our own fleet, and we would tell the world what the fleet was doing. Today, you don't have that card anymore, right? Basically, everybody has access to exactly the same information. So I think you need scale and consolidation because you need to be able to get your information faster than your opponents or your competitors, and you need to have, you know, solid data to support the decisions you make. Everything goes up in speed.
I think your comments neatly anticipate the second agenda item that we have, which is what does it take to right size your business and operations for a sustainable and viable future? Perhaps, Robert, we can have some of your thoughts on this key question.
Wow. You know, I think Michael's, you know, good introduction. I think, you know, the two of us have been, you know, competitors, friends for a long time in this business. And, you know, we were, you know, recently chatting that, you know, if you'd wound this back to the last cycle 10, 15 years ago, you know, you would have considered that running 50 product tankers would have been quite a sizable, significant fleet, and you would be able to create enough, you know, advantages over your competitors and be able to really service your customers very well. But both of us are running fleets that are now approaching, you know, in pools, you know, 200 vessels each. And, you know, we're even, you know, opening up the idea with technology, with what we're talking about before, that could well go higher. We've recently seen, you know, for example, Diamond S, who historically, I mean, they have quite a number of MRs. I mean, approaching 40, 45 MRs. And in the last cycle, they would have been a pretty big, significant player. This cycle, they've clearly felt that they're unable to really be the right size by themselves at that level, and we would agree with that. And they've chosen, you know, the correct view to go and pool with Norden to create a much bigger commercial platform. So I think that, you know, go back to what Michael was saying at the beginning, which is people. Today, it's not just how much you pay someone that will dictate whether or not you attract them. It's what tools you can give them to do the job. And obviously, if you're running platforms with greater ships, your IT systems are likely to be better and more comprehensive and more advanced, as well as your actual opportunities for youngsters within those bigger companies. And that's before you get to the capital markets, whether it's debt or equity. It's quite clear that liquidity matters for equity and size matters now for traditional commercial debt.
Thank you. Michael, I welcome your thoughts, and maybe you can weave into them. What is the right size? If you and I were talking a few years back, we might have said the right size is 50 vessels. Then it would have been 100, 150. Is the right size actually ultimately a 300 vessel size fleet? What is the right size?
Yeah, and I think that's obviously a great question, right? And I can tell you as much as that number has moved, as Robert said, over the years, right? And I think the way it moves normally is that whenever you increase the size of your fleet, you actually do it on the back of an analysis of you think you can get more value out of it, right? So as a good example, I mean, you know, a geographical spread where you're able to have X amount of MRs in the West, in the East, South America, and you start looking at your results and you can see, well, we can do better with the scale we have. But, you know, sometimes you've also reached levels where you found out that, well, these additional 10 ships at that time didn't give me extra value. So I think it's a moving target, but, you know, I have no doubt that with what we have available today and how the industry looks like, I'm quite sure that this number will keep on going up. And the prime reason is that when we look around and compare platforms, that there will be a huge difference, not just in your investment in commercial tools, as Robert mentioned, but clearly also in the way you operate your business on the cost side. And there are big differences already today. And I think that will always drive consolidation as you go forward.
I mean, as you say, on the cost side, I mean, one of the perennial questions is the balance between spot and time charter and getting that strategy right. Any words around what it takes to find the right balance there?
Yeah, I think it's obviously for us at least. I mean, it's a changing mark, right? It also matters how you see the market. You're not going to be stupidly going into a strategy where you say, no matter what, I'll stick to this only. But I think what it does acquire is that whichever strategy you choose, if you choose to be a spot operator, i.e. in full spot, you've also chosen to have a revenue base that's highly volatile, right? And I think that does require discipline on the balance sheet and the other part. You know, it's a deadly cocktail to challenge both, right? And so I think that's where the comparison would be. But I think the decision is even more also commercial, right? And like Scorpio and us and others, as I've seen, people go up and down in terms of charter out, stay spot, depending on how we see markets move around us and how we see them develop going forward.
Robert, I sensed you wanted to come in on that point.
Yeah, I mean, I was going to say that, you know, we're talking about right sizing, I think that, you know, both of us have also the advantages when you do have larger fleets. You actually have the ability to do a number of things. You can cooperate with your customer in terms of, you know, either market related contracts of affreightment or desk to desk agreements, and so you can actually build more on that. You can have 1 or 2 time charters if you want, as well as a secure cargo, and that secure cargo may not be as secure as an actual time charter, but in an industry that we really benefit in terms of utilization and triangulation and voice choice, I think that, you know, it can be a great advantage to your earning and your security of earning if you with the fleets that are big and homogeneous that can, let's say, have these closer cargo cooperations with the customers. And I think both of our companies have those.
Thank you. Just ahead of opening up to the floor for the Q&A, and ladies and gents, do keep those questions flowing. We have got a good number. Please keep them coming. Here's our third discussion point. It relates to reinvigorating the supply chain, new standards, collaboration, contracting models, and cash flows. Michael, perhaps you could get us underway on that one.
Yeah, so I think, I mean, we kind of touched upon a few of these items, I guess, right? But I think it's maybe the right place to start is actually to talk a little bit about the industry and the collaboration. And you know, I think, you know, one of the things that we do need to focus on, and I think it's starting, but I think there's a lot more to be done, is that there's got to be a lot more industry collaboration across your roles in shipping. So in other words, we need to be better in sharing what we have, you know, in order to make sure that we, you know, we get off for the right path for the future as well. These are big tasks ahead of us. So I think if there's a big issue, I think that is the one. I don't think shipping in general over the years, we're pretty good in socializing, but I wouldn't say that sharing information in general on topics like that has been on top of people's agenda. And I think that is needed now. I think we all need to participate. It's not just the owner's problem that X, Y, and Z needs to be changed in order to transform into a more renewable, future-proof industry. It's a responsibility for all of us. And I think we'll do a lot better if we can get that one on track.
Thank you. Come in, Robert.
Yeah, I think I totally agree with Michael. I think it's all of us. I think also that, you know, it's an area that, you know, I would expect there would be, whatever you want to call it, a truce or cooperation even between competitors. I mean, I wouldn't have any problem with, you know, our technical people ever on the subject of safety or environment in, you know, discussing with another owner ways to, you know, improve things going forward. So I think I would echo Michael's position that, you know, it's something we all have to do, and we'll get there quicker and in a better way the more we put everybody's minds together.
Okay, speaking of putting everybody's minds together, I think let's open up now for questions. We've got quite a handy number of them, which won't surprise you. So we'll get straight underway. Ladies and gents, please keep them coming. So the first one is, how do the panelists feel about the short term? We're talking 3 to 9 months for the spot pricing in the Suez and Aframax markets. Anyone want to chance their arm on that one?
Oh, fantastic. Obviously worse than any of the product markets. Don't you agree, Michael?
Totally, yeah. I'll get out of there.
Yeah.
Inevitably, we haven't
But
really
no,
touched.
in seriousness, though,
Sure.
I do actually, percept the competitive part of it. I think I would expect over the next 3 to 6 months that for the dynamics of the product market itself, I think that the product market itself is going to continue to do what it's doing at the moment, which is outperform the Suez and the Aframax crude markets.
One of the obviously topics of the day is COVID. We haven't really talked about it, but we can. And a byproduct of COVID has been lack of crew changeover. So the question is, how is the lack of crew changeover impacting your companies? And is there a clear illustration of how many ships can or will be impacted? You both got large fleets, so yeah, it'd be interesting to hear that one. Michael, perhaps first, and then Robert.
Yeah, so for sure. I mean, as people have been reading about, this has been a major issue, and I think I'm speaking for a lot of people in this industry that we don't feel that it's been done enough actually to ensure that we've been able to shift the crew that are on board all vessels around the world. It's been a massive problem. As you know, people have been been staying on board for 12 months, longer time. They've had problems at home that they've been unable to attend. They've been unable to come home and see to their sick family members. So from a personal perspective, this has been one of the major things in the COVID-19. Operationally, I would say though that it hasn't had any effect on, if you like, on the earning capability of the vessels as such. So we haven't seen any casualties, we haven't seen any COVID-19 issues on board the ships. But I think as a global thing, we have been trying to urge, and we need to continue to urge the politicians and the government, because that's where it ends, to ease up and make sure we can get crew on and off safely the ships, because I don't think anyone would want to be stuck anywhere for the period of time that we've seen most of the crew on board the ships having been so far.
Thank you. Robert?
I would echo Michael entirely. I mean, we all, the whole world has a tremendous, should be saying a tremendous thank you to these crews. I mean, without it, obviously the trade in the world would stop, and it's been very disappointing that we haven't been able to get the various governments of the world to really get a unifying policy that can help these situations. I mean, I think the last part of the question was, is there an illustration of how many ships this can affect? I think the illustration would be, every single ship in the world that's an international ocean-going vessel.
Thank you. A more market-based question. For the past few months, there's been a lot of discussion on the perceived disconnect between share price, NAV, fair market value, and so on. How much of a concern is this to you? Our delegate says almost the entire industry is trading near 52-week all-time lows. What are the positive and negative impacts of this? There's quite a bit in that. Maybe you take issue with it. Michael's smiling. Maybe I'll come to you first, Michael.
Well, I know Robert is dying to get in on this one, so I mean, I think obviously everything we do is about creating value for our shareholders, right? I mean, this is the prime purpose of why we go to work every day. So obviously it's not satisfying, and I think the whole energy complex has been a bit under pressure, obviously for a while now. I mean, you can only read into it that people have a more negative view on the future than what we have ourselves. And at the end of the day, it's really about trying to prove the other way around. I mean, I can only say that looking at the first 6 months of this year, having been in the business for 35 years, I have to go back many years to see something like that on earnings. So, if we just stop there for a minute and say that justifies that big a discount to NAV, well, I find that highly extraordinary, but again, we just need to work hard on it. It's a long-term business for us, which is good. So but it's clearly disappointing that we've seen trading where everyone is trading today.
I
Come in,
think
Robert.
I think it's a very well constructed question. I wouldn't argue with any part of it. I mean, we start, shipping itself is in the value trade, and virtually all companies related to value are trading much worse than, for example, technology. So we don't sit in a great sector. Then shipping itself is not as a known sector. It's not very liquid. It's not there, and it's very risky and very volatile. And in a time like we have at the moment, the stock market is going to take a risk-off position to shipping, where the simple headline position is going to be world trade is down, oil and product demand is down. So sure, I get the logic that shareholders and potential investors for the time being would think they should go elsewhere. We, of course, have the privilege of understanding what or not of what net asset value is, but many investors in a normal course don't actually look at net asset value. I mean, unless you're a specialist shipping investor, you do. But if you're just a normal investor, you're really not familiar with what net asset value is, etc. So I think that it's easier to see what the positives and negative impacts are. So the negative impact is, yes, it's frustrating. It makes it such that we have to navigate through this period quite carefully, because the equity markets are really not open, because we're all trading at such a discount to net asset value. But actually, there is a tremendous silver lining to this, in that the capital markets themselves are not providing capital. So there will be no capital for new buildings at the moment coming from the equity markets. So that is a really good plus in the long term. And what we have to do is we have to manage value for the long term every day. And I think going forward into this period where we're going to next year and the year after have increased demand, coupled by a very small order book and increased aging, vessels approaching 15 years and being removed from the premium product trades, whilst you have this starving from the capital side, it'll be a benefit. So I think we have to focus on just getting on with running our companies through this, and in time the stocks will take care of themselves. I mean, very often we have periods where there's severe concern, where where companies trade below net asset value, and then, like in the late 2000s, when things come in, when cash flow is there, companies trade at significant premiums to net asset value. It's a moving target.
Warming to our theme, and in terms of what it takes to keep going, with the current market position, do you both expect more ships going into yards for either scrubber installation or scrapping of older vessels? Two-part question, really. Will we see more scrubber installations? Will we see more scrapping? Michael, you're nodding your head, so in you come.
Yeah, well, at least as far as I can give my view on it. I mean, I think, for sure, I think the economics of the scrubber situation has obviously changed, and for sure we've seen postponement and even cancellation. But I do believe you will continue to see vessels going in for scrubber retrofitting. Obviously, for the larger ships, the calculation was always more meaningful than maybe for smaller ships. So if anything, if you're looking for cancellations, I would imagine would be on the smaller side of it. But I still think we'll see, at least for a lot of the bigger ships, continue to do that. The scrapping discussion is definitely interesting, and I guess, I mean, our view was always that we would see increased scrapping going into this area of quite a lot of upgrades that needed to take place, quite a lot of capex that needs to come. I mean, Robert mentioned 15 years of age, 20 years of age. So what you are seeing these days is that it is getting more capital intensive to pass these surveys, and therefore, when it comes to weaker periods and more pressure on that, for sure, the scrapping side will be particular when I think when you come further down the curve, will be more relevant for a lot of owners than maybe it was if you look at a similar situation 5 or 6, 7 years ago.
Shall we take the next question, Michael, which is, why are you not buying back some of your shares with the generated cash with a mix of paying down debt? I can take that first, or you can take that. It's up to you.
Yeah, no, go on, no problem.
Okay. Well, for us, we've clearly stated that. I think it's a great question, and you know, we've clearly stated that we're spending the time at the moment increasing liquidity, putting cash on the balance sheet, and lowering our net debt to equity. I think that it's you know, we are confident of the future, but I think that the most important thing is to get to a position when you start doing stock buybacks, you've really got to try to do it from a position of strength. And what that means is that if you start, you've got to sort of know that you can continue, and you're not in there just to buy back stock to, you know, nibble away and make nice press releases. You have to do it for a proper reason. And right now, you know, despite a long-term confidence in the market and the company, I think that the company needs to first get on the balance sheet the cash it's been generating in the second quarter and the start of the third quarter, get through this little bit of weakness, get a little bit more visibility into the COVID-19, and then we'll be in a great position to do, you know, whatever we need to after that.
Come in, Michael.
No, I was going to add to that. I mean, I think, yeah, it's absolutely a very good question. And I would just say that certainly for us, I mean, that will always be an item that will be discussed on an ongoing basis, you know, for all the reasons that Robert mentioned. And I think for sure it'll be part of something that will be discussed here in this situation as well for Hafnia, for sure.
Thank you. Let's pick up on another one of the talking points from our discussion, digitalization. Gents, will digitalization change pool point models further within the next few years? Perhaps, Michael, you could get us underway, and then certainly, Robert, we welcome your views.
Well, Robert welcomes Michael's views, actually, on this one.
Okay.
Yeah. No, I think, I mean, at least if I understand it right, I mean, then I think the short answer would be yes. But what I mean by that is that what we are seeing, at least now, the way that we work with our pool point models, is that they are increasingly getting more sophisticated in trying to understand the earning capability of each ship. So if you look at the conventional model, it was very much about a simple speed and consumption model. Then it's grown into, of course, you know, what other features do you have that gives you a better earning capability. But what we're seeing now, and what I think will also change pool points as we go forward, are much better data analysis that you can implement on your vessels. I mean, we have, of all of our pool vessels now, implemented a system called Coach, which basically sends data all the time back. And we've seen that the actual pool points that every ship gets allocated are now more accurate and also different than they were before, purely driven by better digitalization and better access to data. And as we see this going forward, we're going to see better analysis, faster access to it, and at the end of the day, we think a much better assessment of pool points for each vessel, which fundamentally is really what it's all about. The pool will not survive if you as an owner don't feel that you're getting back what you're also putting into the pot before you share.
Thank you very much. Now, one of the dominant themes among the questions that we are fielding relates to environmental and compliance and cost. So the question I have for you, gents, is, do you believe customers need to participate in cost sharing in order that we can all adapt to new environmental regulations?
No, I mean, this is sort of an age-old question for shipping always, is, you know, something comes along and, you know, the ship, and somewhere in the ship owning community, it's, well, that's an expense, the customer should pay for it. You know, at the end of the day, the customers, you know, that they do pay for it in one way or another, but it's never been I think, a good thought to think that the customers are going to immediately, overtly, share in something or forced to do that. I think there's an individual basis. I mean, we've already, you can have time charters, you can have you can have agreements, you can have revenue things. I think that both of our companies' customers, I'm sure, when they're giving us contracts or whatever, take into account our environmental records anyway. So whether or not we're given a first preference or just preference, that's a form of payment, or whether it's given it in terms of getting a contract, that's a form of payment. I don't think it's a good policy for us as a industry to start trying to come together and say we're not going to do something unless the customers pay for it or share in it.
Michael, your views?
Yeah, so I mean, I think I guess more from a broader perspective. I think if we are going to push these things forward, I think particularly when it comes to environmental changes, it's important to understand the full effect of what we do. I mean, transportation is one part of the environmental footprint for any commodity that travels around the world. So I think if you look at it from that perspective, I think any changes in some form and shape will be connected to all the people involved in the chain, not just the customers, also us, but the full work, including from the shipyards into the oil companies, the traders, etc. So I think if we want to push, and we should want to push in a direction of a better environment, again, we're back to the collaboration. I think we all will have to share and pay in order for this to be effective. And we need to look at it in a broader perspective than just picking out small pieces, but really understand what is the total and full environmental footprint that we are setting by producing, selling, moving, buying, receiving various parts of commodities in the world.
You talk about environmental footprint. Any view when the world will actually reach peak oil? We kind of touched on it in the open discussion, but can we commit to a timeline for that? Is that possible? You want to stick your neck out, Michael? No? Robert, no?
Well, I mean, I think it's
sometime in the future.
Yeah, exactly. No, but I don't think, I mean, I'll tell you, interesting enough, I was in a roadshow in New York, I remember, in 2008, and all we talked about was actually, or 7, was peak oil at the time, right? And then shale oil became active and things changed. I think, of course, we all know that the world is moving towards different trends, but, I think we have to remember as well that things don't end one day to another. And personally, I think we still have a long tail to go, and going back to what you initially asked about for this webinar, how do you create a robust and stay resilient for the future? One of them is, of course, to have the best business out there, because even after peak oil, there'll be a lot of transportation demand for many years, and the ambition for Robert and ourselves should be that as long as we can stay competitive with a strong business that's lean and slim, produce the good results, you will be there for a long time even after, right? So it will be a bit of survival of the fittest whenever you get to that point.
Okay. A couple of sort of technology-based questions, if you will. What do you see as Robert, sorry, did I deny you an opportunity? Okay. What do you see as the best adaptable technology to cope with the challenging decarbonisation IMO strategy and being able to adapt for the future? And let me chuck in another question, sort of technology-related question in there. So I'm 2 for the price of 1. How do you regard cybersecurity as an issue? So the first part of that is technology to cope with the challenging decarbonisation strategy set out by IMO. And secondly, how big a part of your considerations is cybersecurity?
Cybersecurity is a very big part. I mean, we have, not just it, in terms of, it's a separate item. It's a separate item at all board meetings. So, it's been elevated to the level of, environmental compliance or safety. We can't really treat it as more importantly than we do.
Okay, so our last question before some key takeaways from our panelists. more market-based, global refinery margins, especially gas oil jet, are not healthy, which led into big run cuts, which probably will stay for a little while. Floating storages, especially gasoline with demand, is picking up very quick and will be released sooner than expected. What are the bullish reasons for rates to pick up again to healthy levels in the short to medium term?
Well, I actually think I think one of the most bullish things in the medium term is that inventories are being drawn down very quickly. We're seeing, across the board that they could come down to pre-COVID levels, as early as December. But even more importantly is that's assuming that they'll take them down to pre-COVID levels. But some people think that people won't take inventories down that low because of the lack of things will have the opposite in oil, that some people might believe that strategic reserves, because of volatility, need to be kept higher. So in the medium term, I think the bullishness is that we are clearing things very quickly. I don't think there's very much in the very short term that is bullish about spot rates. I think we're entering anyway what is the weakest period of the year for the product market on any given year. So we should expect weakness in the very short term. But I think that we can see bullishness, from the fourth quarter.
Michael.
Yeah, no, I mean, I agree, and I think I will probably just add to that I mean, going into to this year before the COVID-19 situation, I think the fundamental story, besides the IMO 2020 change of rules and regulations, was actually, as Robert alluded to earlier, that we were looking into a very good supply-demand balance in general. So we saw low supply, and we saw just not even a massive demand increase, but even a normal demand increase would actually sustain a very good product tanker market. Then we got a bit sidetracked on, obviously, on the whole COVID-19, on the reduction of demand, the floating storage. But I think if you look at before and after what we've been through, we're still looking at a relatively healthy situation driven by low supply if we get back to normal demand figures. So I agree with Robert. Q3 is never a strong quarter as such. I would add to the, when you go further out, there is one more factor to keep an eye on, and that's obviously the geopolitical issues. We have seen now again issues about ships that have been blacklisted being in Venezuela. We've seen a Chinese fleet, again, the same thing. And we saw the effect every single time because the demand supply balance was tight before that. So I think the market is vulnerable in a positive way to any geopolitical tensions, issues that may arise. And as we've seen before, that will have a bullish effect on the market if something like that should happen.
Thank you. Gentlemen, at this juncture, what I would like you to do in turn, just reflect on the discussions that we've had and perhaps try and share one or two or three key takeaways and conclusions with our audience. Perhaps, Michael, I can come to you first.
Yes. So, I mean, I think that one of the key takeaway and conclusions here is that when we look about and look into the future, I think it's a lot to do with access to people and having the ability to attract, as an industry and as a company, the right people. That is, in my view, key to any business and anything we look at in all the topics you asked about today.
Thank you. Robert?
Yeah, I would concur with what Michael has said. I would also say that I think the key takeaway is that it's no longer a question in the product tanker market as to whether or not we will have consolidation. We've had a lot of consolidation in the last 2.5 years, whether it's through mergers and acquisitions or through pooling. And I think we can be confident that will continue. And then you will also have consolidation in a third way now. So we've had it through M&A, we've had it through pooling, Now we're going to have consolidation in the sense that those fleets with older vessels will just get smaller. And so therefore the market, the number of owners owning the newer vessels or the sub 15-year-old vessels will be less. And so it will be consolidated through aging too now.
Thank you. Gentlemen, thank you very much for pooling your experience on this webinar. We will consolidate what's been discussed in an article and make that available after the webinar. But again, thank you very much indeed for being so open and generous with your time, Michael and Robert. Ladies and gentlemen, this has been Tanker Shipping Leaders. Next week, an entirely new themed week. We will be looking at marine fuels, and first up will be fuel additives and fuel blending. To ensure that you keep abreast of Riviera's evolving webinar program, please bookmark www.rivieramm.com/webinars. Riviera, for its part, will continue to serve the information that matters most to you through our magazines, through our weekly newsletters, through curated content that matches your interest, and through relevant events such as this. Do not forget that later this year, all things being well, we will again be staging our Tanker Shipping and Trade Conference. It will be in London in November. In the, I guess, the right-hand side of your screen, you'll see a very familiar face, not me. I'm referring to Robert, who in fact has been one of our industry leaders of the year. And we will again be awarding accolades to outstanding contribution and performance to the industry over the last 12 months at this event. Well, more than enough from me. Safe to say thank you again to Robert and Michael. Thank you for joining us from near and far. I will email you the exit survey. Please do take the time to complete it, and in turn, we'll send you a link to the broadcast. That's it. Wherever you happen to be in the world, please stay safe and well. And from myself, Michael and Robert, a very good afternoon, good morning, good evening, and until the next time, goodbye.